Aditya, how has the response been from investors to the IPO till now? The numbers seem fairly impressive.
Well, actually, we closed the anchor book yesterday, which went off very well, 832 crores. Some of the really blue chip anchor investors from around the world. The investors have really spoken in favor of Indigo. So that is obviously a great shot in the arm for us. Today, we opened the issue. The non-anchor QIB book, from what I last know, already subscribed to 1.2 times. I think it was 0.94 times in the first 1 hour. So feeling good, and more than anything else, now puts the onus on the management team and on Indigo to make sure that we are able to come through on the trust that these investors have put behind us.
Right, and Aditya, can you also tell us what has been the reason for the strong anchor book investment that you just spoke of in the company?
I'd like to believe that it is the fundamentals of the business. It is how unique the story of Indigo is, how we've been able to create structural advantages which others cannot replicate. We've got a huge amount of growth ahead of us in a country like India, which is highly underpenetrated. We've got the cost structure going down because of the advent of the NEOs into our fleet. So all of those things, I think, came together. We've been on roadshows for quite a few weeks. We were happy we had the chance to explain our story in detail, and I'm glad they really voted for us.
The dividend payment just before the IPO has been criticized by analysts. Do you think that created negative publicity for the company?
Well, I don't know whether publicity really matters, but we had the chance to explain. And more than anything else, now I can emphatically point you to our book and look at how the investors have responded to it. And I've always said it was a non-event, and now the investors, I think, feel the same way.
Okay, fair enough. Let's talk about the growth going forward for Indigo. What is going to be your dividend policy going ahead?
It's not a policy, it's our worldview. We look at how profitable and cash flow generating we are. We look at what's our capex requirement, what's happening with the marketplace. So just like in the past, we've been very shareholder focused. We will be in the future as well. Just like in the past, in 2012, we took a very pragmatic view when market dynamics was such that even though we were profitable, we kept the cash within the company. In the future too, we will take steps which are in the best interest of the business. So we will follow that very prudent balance between, of course, being shareholder focused, because shareholders put in money into a business for returns, and as well as doing whatever is the right thing for us to do for the business.
And highlight for us where exactly these IPO proceeds are going to be utilized.
Well, almost entirely, almost all of it will be going towards retiring a part of our part of our aircraft-related debt. As you know, we do not have any non-aircraft debt, and the balance is buying some ground services equipment, but mostly it is just retiring the aircraft-related debt that we have.
Okay, Aditya, we'll let you go with that. Thanks very much. All the best with the issue. Let's see what the final participation looks like.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.